Hello, ladies and gentlemen, and welcome back. Well, what a super important level for markets we find ourselves at right now. Many people are messaging me, and rightfully so. It's not only a key level, but there's also some concerning things happening underneath the hood. Ahead of the biggest earnings that we've seen in some time, we know that we have two things going on. Huge rallies in tech and huge FOMO being felt by us, the retail trader. So as we come forward to the next 24 to 48 hours, giving us both Microsoft and Tesla earnings, are we actually entering into a buy the rumor, sell the fact type of market? There's a lot of resistances that were just hit over the last 24 hours that we need to discuss together. We're talking about stocks, commodities, and cryptos right now. Well, welcome back everybody to the Daily Show, where we talk about news, macro data, lead indicators, and of course the key levels that you should be watching right now. Everybody's talking about AI and specifically ChatGPT, as it just earned itself an honorary MBA, it looks like, by passing a test with a B to B- average. It's amazing what AI can do right now, but people are starting to listen up and invest in it as it's a little bit cheaper than it was during 2020 and 2021. We will be doing a special on AI on this channel in the future, so make sure to subscribe. But specifically at the moment, it's all about Microsoft and Google, and specifically Google with its new release of Duplex coming out is one that everyone's looking at. It's up 10% in the last 3 days, and it just hit a critical big trend line that we need to discuss. But what I'm hoping with this AI is not only is it going to be a huge thing for the next 10 to 20 years, but we've also got to hope it's not like that film. You know the one I'm talking about, The Terminator. Let's hope it doesn't turn out like that. Let's also go over to our channel here, which is at FX Evolution. Follow us over on Twitter. We're posting a whole bunch of big information there. And we'll begin by discussing the rotations. Now, retail traders love these stocks. And this is actually what's been leading the market in pretty much the last 1 to 2 weeks. We've seen things such as AI, EV chargers, Tesla concepts, SPACs have some of the best days they've had for a very, very long time. And it's been fairly consistent. Most days they've been up and huge moves coming into these sectors. Now, is this what we call a buy the rumor, sell the fact? Well, let's look at the facts right now. As you can see here, I shared on Twitter, Apple filled a gap that we talked about for a long time, 144.39. Tesla literally moved all the way to its expected weekly high based on options and then rejected that level. And Google, based on the AI kind of phenomenon right now, moved up over 10% in 3 days and hit a trend line that's really big. On top of that, we find Nvidia hitting its biggest resistance zone pretty much for all of the last year, and it's going to be a critical thing. Now, this happens ahead of earnings. Little wonder why they say that earnings or big news can push markets to their next equilibrium level, and we'll discuss that a little bit later on today's show. We've also seen some of the largest moves in terms of exchanges, and Bitcoin exchange movement is something that we watch certainly to kind of find out whether markets are potentially going to rally. Now, it's been the largest reduction on Bitcoin exchanges ever, and the reason why is quite simple. Of course, the FTX disaster makes people scared. They're going to take most of their money off and put it into cold storage. However, it's still something that I'd be watching. If too many people move on to the exchange, it's been long known to be one of those critical levels for markets. And it's something that you do watch. Now, we've already seen the largest reduction. So does that mean that this Bitcoin rally is real? Well, I think it really comes down a lot to the stock market. But in terms of timings, we've long discussed that somewhere around February into kind of that April period should be theoretically close to the lows. And we said that maybe 4 or 5 months ago, 6 months ago in terms of on this channel. And there's a reason to it. We will be covering it in more detail later on this week. Let's go over to emerging markets and talk about what's happening there. Well, we know that emerging markets have been hot right now. Call put volume over 3 months has actually reached a new high. So while the US market's mostly been puts everywhere, the emerging market's starting to become quite a lot of calls. Now, we've had some previous times when this has occurred and it's crossed this threshold. And let's just say it's never been good for emerging markets. So emerging markets hitting a downward trend line, also hitting a critical level. It could be time to be very, very cautious on these hot commodities or hot areas, because right now it looks like as a whole, they're hitting a critical zone. We do know that Goldman Sachs has bought out something, and I thought I always share it because I like it when you have like a soft landing and hard landing scenario. I've talked about this over many, many days, so I'm not going to go through it too much. But do remember, Goldman Sachs still believed that even during a soft landing, the market would probably come back down to the low. I still think that's very possible this year. And if we end up getting a hard landing, which still a lot of people do expect, but of course, soft landing's now the news story, then we should take off all of 2020. And that's still basically the base case scenarios that we have. I still think that there's a really good chance that we have a bit of volatility, and most likely that volatility is going to come through in February or even later on this week to get started. We'll talk about that as we go through today's show. Why do we believe that there could be some volatility coming up? Well, a lot of it has to do with one very, very solid statistic. If you get a Santa Claus rally, you have the first 5 trading days of the year positive, and you had a previous negative year. If you get a January positive return, let's just say the stats speak for themselves. It's like 100% positive and really huge. Coming into, of course, the pre-election year in the US as well, we know the stats are incredibly positive if the previous year, midterm election year, was negative. So there's a lot of data stats saying that the investor is finding a very good year should the January return be positive. Yep, time will tell. We're going to find out in only a few more trading sessions. Let's now look together underneath the hood of these markets. It's so important to do this, and a lot of retail traders like you and me don't do this. We don't pay enough attention to it. What was the best performer over the last 24 hours? Clearly, growth stocks. Nasdaq was absolutely kicking the Dow. So it's a huge shift from what we saw only a few weeks and months ago, where the Dow was beating the Nasdaq consistently every single day. This is what we call rotation throughout the markets. Now, if we take the last 5 days into account, you'll notice semiconductors, clean energy, communications, technology, consumer discretionary, all of these were absolutely smashing it for the sessions, and they've been doing really well. While the defensive sectors, utilities, staples, and healthcare haven't really been doing anywhere near as well. Usually you want to see rotation into the staples as you're moving into a high buying zone. You move into a coil, the staples improve, the market breaks out down below, you know that's a real move. At the moment, we're not seeing that. Of course, we've got tech just going ballistic. It's more likely that in this case, it could be a buy the rumor, sell the fact into earnings. And really, earnings is dictating this particular movement. Last 24 hours, all the normal same ones, TAN, clean energy, semis. Semis were up massive, 4.72% on the day. This idea of the AI thing, I think, is splitting and making realistically a huge amount of moves and hype into those stocks. It's a time where you've got to be very concerned. You ride those waves, but if you're not in them, maybe you've missed that boat and you've got to just start thinking about having that patience to react. Don't predict too much into something in the future. So it's the big earnings week. I think it's almost 20% of the S&P 500 market caps coming out. We know that the next 2 weeks after this is going to be really important, but we begin with Microsoft after the close Tuesday and then Tesla after the close on Wednesday. This is a huge deal. If they don't do well, you know what's going to happen. Bad things for tech. And especially when we start to look at these charts, which we'll do together now, you'll see some critical resistances potentially getting hit. Let's begin with the VIX. As we know, we've got this 20 level. There's not much to discuss about that. It's historically low. If you'd sold stocks in 2022 around the 20 and the 18 and then bought stocks around the 35, 30, you would have done very well in 2022. That was actually probably one of the best strategies to employ if you were looking at dollar cost averaging and other things. But it is something that we need to be paying attention to. Another thing I want to mention was that we've seen a very interesting phenomenon here. 1, 2, 3 days up for yields, and the stock market's also gone up in technically yield sensitive stocks. So that's very interesting. This is not something that you usually have liked. And when yield has gone up and stocks have gone up, again, something we need to be concerned about if you're a longer term investor or somebody that's trying to position in. The US 10-year also has found 3 strong sessions. And it's not like we're seeing a huge amount of cuts coming through in 2023. If we take the September 2023 read, we're still sitting according to the bond market at 4.8. Now, the Fed believes it's going to be 5% plus, so something's going to break here very, very soon. But realistically, the bond market is calling the Fed's bluff and saying, hey, we don't agree with that. What happens if the bond market suddenly does agree with the Fed and the Fed were telling the truth? Now, obviously, we don't believe the Fed always do tell us the truth, but they're adamant on it. The bonds market doesn't agree. If it starts to agree, stocks should come down off that type of thing. Let's move over to treasuries. We spoke about the island reversal here. We saw another sell-off. It doesn't look strong at this point. I'd like it to kind of come back down and treasuries to hold in a pattern for a period. They're not usually as aggressive in terms of trends and trades as they have been recently. I know everybody's crowding on this trade, but that's certainly an island reversal. And for now, there's no reason for us to believe there's super strength here in treasuries just yet. Let's move over to the US dollar. Now, this is a conundrum because we've had so many strong kind of rejections off the lows where we've seen wick, all coming off this low. But at the same time, if we look at the 2 hour, we also know that we have some decent rejections coming through the high, and more importantly, a series of highs and lower highs or lower peaks. Now you can see here that these rejections have led to a weakness in the US dollar at this stage. And if the US dollar breaks a new low and doesn't instantly reject it with a nice bullish hammer, then this all probably was part of what we call a distribution, and the US dollar will go lower. There's some important levels to note. First up, we need to say if we break through 102.05, that's a marginal bullish style position. If we get through 102.355 and close, that's going to be a very strong case scenario for saying that this is accumulation and we're moving forward. So what I'm excited for is actually what's happening here in the US dollar. We should see a large move coming in only a few sessions. Maybe it's going to be earnings that pushes us through, but do pay attention to it. Basically, the euro is the exact opposite, so it's the exact same thing, but look at that supply. Again, we hit it over the last 24 hours, instantly rejected it. We know we're at critical. The question is going to be, which way will it end up breaking out? The euro ended up busting a new high, instantly rejecting back down, and we find ourselves here. We make a new low. You'll notice I've got an alert for that, 108.50. Unless the market actually instantly rejects and then goes back above where it is right now, basically, we would have to think that that's weak for the euro. So watch the dollar, watch the euro. They are heating up in a big way. What about gold? Well, for anyone that follows us on Twitter, you would have known we couldn't live stream, unfortunately, our Monday live stream. Don't worry, that'll come back next week. But we did release a quick little video talking about a few things. One of those things was weakness of gold into the demand zone. And it did happen. It went weak, but it only just tapped into this. Ideally, I was looking for that kind of 1908, 1910, and then a little bit of accumulation to show us some buyers were recommitted, but just shows you how strong gold's been. I do think gold will probably blow off. And what that means is that we get a rally that's so significant, everyone jumps on board, and then suddenly it dumps a huge amount in the day. We'll be following gold as much as possible. I'm a huge bull on gold. Don't get me wrong. I'm always bullish gold into generally this period, into Chinese New Year, and then just after it, I start to get a little bit cold feet. But look, gold's been a great run. For anyone that's been following the channel, you know I'm very bullish on it generally during stagflation or even during interest rate cuts. But I do think it's becoming a crowded trade. So critical zones here for gold as we move forward to closer to $2,000 an ounce. Let's move over to US oil. Big deal here. As you can see, the monthly rejections are massive. And we haven't got a monthly close yet, but if it does happen like this, yes, it looks like oil should be buying at the dips at that point. We changed our tune on this basically about a week ago in terms of saying, okay, looks like this thing's actually looking a bit more bullish. That happened around 77. It was realistically because this last sell-off, which should have pushed us to 65 a barrel, failed. And when that failed, you have to think, okay, that would trap in a lot of shorts through here, and they're most likely getting squeezed. Kind of similar to what's probably happening in the stock market right now. But this is a critical point for the markets. You can see the big closes, even the significant close that happened only a few sessions ago. It's pushing this oil narrative that could go all the way upwards of around, I would probably think about 88.90 to even 90, potentially even 92 a barrel. So we'll just pop in a couple of targets here. And I think those levels are very interesting for oil moving forward. Critical zone, next couple of trade sessions into the close of the year or close of this month, January, are going to be important. What about copper? Well, copper has hit super critical levels. We know the China trade is, again, one that's super heavy at the moment. Everybody wants to be in that trade. And look, we've got a lot of sectors and a lot of areas hitting into those critical supply zones. So I think that this is a point where copper could turn. And copper usually shows us the health of the world economy. So unless the copper traders are really wrong, it's either this was just huge amounts of spike interest from China into Chinese New Year, and that should theoretically drop after Chinese New Year. That's usually what happens here. But wow, what a resurgence in this metal that's got a lot to do with economic builds. Let's have a look at Tesla. This was a huge move. I mean, it moved up to 144.36, which was literally the expected weekly options move, and it hit it and then found that as resistance. I mean, I wouldn't be surprised if it was going to hit it, but to do it in one day is pretty spectacular. If we go over to a weekly, you can see what's at stake ahead of earnings. Obviously, critical point again, big retest up. And some things that I'd start to do here, draw kind of like fibs, understand where the 50 fibs are and the 61.8s and those types of things. And we find ourselves at a critical point. Now, I'll update where the options high is now for the end of the week. So it's 155 basically on the top end, and coming into the earnings 132.28 on the low end. So you can see there's quite a lot of basically huge gap move that could happen off the earnings. And that's what the options market is expecting, almost 15% range that could come through. We've got kind of the top end. Does that make sense at the moment to the market conditions? I think it does. A little bit of consolidation, then a drop. So if we do end up going crazy, somewhere in here is probably where you expect really big selling to recommit for Tesla. But it could even happen here. And it just depends on what goes on with some of the other stocks. Let's have a look at the options flow. Well, 150s have become pretty stacked. Same with 155s. That's on the call side. Effectively, the more calls that come in here, I don't know what these people are doing with their 250 calls, but whatever. The more people that come into these strikes, the less likely it is that it's probably going to break through that zone. So we're getting very close now to those top ends. But as you can see here, 150, 155 on the call wall. And on the put side, well, those hundreds, they were always going to lose. And we discussed that several times on this channel, why 100 put buying a few weeks ago was an insane idea. Anyway, hopefully you didn't do that insane idea. Let's move over to gap fills. Apple has done it. It finally went up and filled the gap here that was sitting at 143.27 and then actually rejected that level. Now, on the surface, there's not really huge amounts of TA that I believe you can do on Apple that is like super spectacular. The main one that most people are going to be drawing is this. And they're going to say, well, look at this Apple move here. We have a downward trend line that held every single market. We head into Microsoft earnings and Tesla. You can see why it's critical, can't you? Oh man, there's so many hits here. So we fill a gap, we hit this down trend line. I was going to bring it up. It just happened a little bit faster than I thought. At 2.35, it was almost 3% up on one of the sessions. We move over to Google here. Take a look at Google. Absolute critical level for Google. Resistance, horizontal resistance, trend line resistance, huge supply, places where Google's shorted before. It's all happening on this stock. We move to NVIDIA. Take a look at this level, guys. Massive zone for it. Weekly, of course, you can see a lot of people calling in the inverse head and shoulders here, should it break. And, one thing I love about usually technical analysis is when you take those kind of huge trend lines, when they proof, it's almost scary. It looks like the market has proofed a point. And you can see I've just taken that from this inverse head and shoulders. So is this, all of these things, people are probably seeing a lot of these and saying, oh, well, this could be the beginning of a new bull run and everything's all great in the world again. I tell you what, critical zone for NVIDIA, critical zone for Google, Apple, even Tesla. Let's move over now to the major indices, and the Russell 2000 starts us daily close above 1891 basically. So above here, we're not quite above the 1900, which stopped it before, but certainly again, critical zone, Microsoft coming in with the earnings. I just think this is the big story here. Here's what's happening on the Nasdaq. You can see the Nasdaq's come up to basically the top end of if you drew a trend line and kind of curve fit fitted it. It didn't stop. And I'll show you on the 2 hour what happened. We basically just consolidated throughout the Asian into London session. And then we just busted high during the open. And it just ran and ran and ran and ran. And then it did do something interesting. We kind of made a high, a little low, a little higher high as we hit, Apple critical, Google critical, etc. And we sold off a little bit, making a little lower low. I think it's super paramount level here. We don't really want to see a new high for the Nasdaq if you're a bear. And the main reason is when you zoom it across, you'll notice that little critical resistance is what stopped it here. So there's a little bit of supply that led to a massive sell-off. There's something going on here. There's probably orders in the system. It's a very important level. Again, critical ahead of the news. Let's move over to the SPX. We know it closed above the previous highs. So that's a 40.19 close for the SPX. So there's little doubt that it's gone higher. Has it broken the trend line? Oh, it's so marginal. I guess you would say yes, but geez, it's marginal. Unfilled gaps, 41.13. And then, of course, that 42 to 43 zone become very open now for the bulls. And I think bears, you've got to just be realistic. Unless you can get back under here, you do not control this market at all. So unless you can get under like that 38.80 kind of area, 38.70, you do not control this market. Any sells, you've got to think some buyers are willing to recommit for now. But January, as we know, is a very, very important zone. Let's have a look at the SPY expected options. It's another one I laugh at because the weekly expected high literally got hit in a day. So let's update that now together. And I've got that ready for everybody. So basically it's a 405.77 now on the high end. So 405.77, we'll just get it in as close as we can. There you go. And then we have on the low end, 395.49. So basically the market has already hit, but what I wanted to do and why I left it there was to show you guys one important thing. Did you see how it hit those levels? And that's literally where it closed. The expected options highs and lows are great little technical take profit zones as well if they line up with other key zings. So it's really, really important to consider that. Now, did our island fail? Well, frankly, yes. I mean, basically you had a lot of islands in the past and they're not, a high enough stat to say 100% of the time they work. But I don't think there was much wrong with the analysis that we did. The key thing that was the problem has to be the weekly, and it's that rejection wick. And that's probably the big thing. Because this level's so important, everyone's making a big deal out of it. Everybody sees the trend line, and it's been our kind of major concern for a while that too many people were crowding that trade. For buyers, you would have loved this level. Obviously, getting it back up into here was great. This is where we thought it would turn for the S&P 500, basically in this area and here. And I'll show you how close it got to triggering. So for anyone that was watching my video that I made, the little quick one, I basically all I wanted the market to do was get below here. So if it had done that, if it had gone below 39.61, I believe the market was going short, literally. That's how close triggers happen. But again, if you have patience and you react to the market rather than try to predict it too much, then you don't get stuffed as much by these types of moves. As it turned out, it broke the high, got through this support, which was the resistance, and just crushed the rest of the day, moving higher and higher and higher and higher and higher. And it got through, it did the same thing, a high, low, high, high, lower, low, and we find ourselves at critical ahead of earnings. I think it's more the earnings than anything else over the next 24 hours. If you wish to wait and see, then if you want to be a bear, probably, there are levels here, but realistically that kind of 41.13 gap fill would be a very interesting zone. And also those 42, 4300s, that's going to be critical. For other bulls, do you want to buy here? Probably not. You want to buy those dips and get the rips, similar to what happened the other day. So it's a critical point. We should find out literally off Microsoft earnings or Tesla, the way this market wants to go. Let's have a look at the options together now. And yeah, it's interesting. I mean, we're now way higher than max pain level coming into the 27th. We know that the 400 strike has certainly picked up, but look, there's just nowhere near the amount of options this week as there were previously. We know that this is 917,000 versus, a significant portion last week, which was like millions and millions and millions of units. So 400 seems to be where the market would rather probably close below this week. And of course, 385 is where it would close above in a perfect world. So certainly some areas to watch. And this is why we say be very cautious here for even the bulls, because there are some reasons to say that this is all potentially a buy the rumor, sell the fact. Big moves in stocks, huge rallies, all retail style stocks into earnings. It's that type of thing where Wall Street can seriously trap. It's all anticipation, but yeah, it's a trapping zone as well. Ethereum, straight at the high, again, resistance. We move over to Bitcoin and we find ourselves again, a little bit of a breakout here on Bitcoin. So that's above that 22,000. Could it be moving all the way to 25? At this point, it's all down to the market. If the stock market starts rallying, 25K seems like the move for Bitcoin. So if you're in the bull side, there's no reason to be concerned yet for Bitcoin. Every time we've gotten close to turning, we haven't quite activated it. And that's what you've got to do. Follow the trend, follow the movement. And in this case, there's no sell signal just yet for Bitcoin. Good luck out there, guys. Remember, there is still Flash Services PMI coming in for the US market at 9:45 a.m. on Tuesday. We've got big earnings, and of course, for the rest of the week, we still move through to advanced GDP and core PCE price index on Friday at 8:30 a.m. Please remember to subscribe and follow us over on our socials. You can jump on at the Linktree link down below if you want to follow us, join the Discord, get the 3 free cheat sheets that we bring out, and everything else. Thanks so much. Subscribe. Bye for now.